Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is March 15, 2023. This is Morning Forex Technical Report, where I take a look at the technicals that are driving the market. But we know the fundamentals are driving the market, so let's get started. The contagion in the banking sector has shifted to Europe, with Credit Suisse shares down another 25 basis points. They've been on a steady decline, and they trade around $1.80 or so. We're seeing European stock indices move sharply lower, with the German DAX now down around 3%. We're also seeing the U.S. stocks and pre-market trading move sharply to the downside, with the Dow Industrial Average now down minus 629 points. The Nasdaq Index is down minus 189 points. We're seeing yields move sharply lower, with the U.S. two-year yield is now down close to 30% and back below the 4% level at 3.93%. In Europe, German 10-year bunds are down minus 25 basis points. The U.S. 10-year yield is down minus 15.5 basis points. So all is happening. We're seeing stocks get hit. We're seeing yields move sharply to the downside. We're seeing projections for the Fed funds in January of 2024 down to 3.65%. As a result of PPI and retail sales this morning, which came in weaker than expectations, helping that lower rates, that we've hit that point where the Fed has to think about lowering rates. The expectations for the March meeting is to a nearly 50% chance that there's no change in policy versus a 25 basis point hike that is up from about 35% for no change earlier today. So things are in motion, and what are we seeing? We're seeing the dollar move higher, except against the yen. We are seeing the euro get smashed. So let's start by taking a look at that currency pair. And if we look at the hourly chart here of the euro versus US dollar, you can see the sharp move to the downside here. This is off of the Credit Suisse and European banking concerns. Down. Plus technical levels being breached to the downside. It wasn't, but earlier today, later in the European session, where the price actually moved above this swing area. The swing area, if you go back in time and take a look at this high price right here, and then we spiked above this level and then reestablished resistance in this area. It goes back in time as well, by the way. We trading yesterday and on Monday, the market came up to these high levels and in the swing area and found sellers and sellers and sellers. And in trading today, what do? We moved above that level in the late Asian session and then failed. And then we started to use this swing area as resistance. This was the big clue right here, where the price rebounded back into that, right to the bottom of that swing area, and found sellers all the way to the downside. Sometimes you need that shove, and that was the shove to the downside that we saw the price move to the downside. Other shoves came on the break of the 100-hour moving average at 38.2% retracement. First look below that level, found some buyers, and then we broke below it with more momentum. The 200-hour moving average and 50% retracement was less of a concern for market traders. They were selling into that. We fell below this swing area through here as well, where we had a number of different swing lows and highs going back in time. You can see that those areas through here and trading last week, the market moved above that level and stayed above that level. So falling below that level, and now we're falling below this level right now. We are moving back up to the 79 level, so we are trading within this swing area. The swing area has again defined by a number of different swing lows and highs going back in time, including these levels through here. You just start to count up these little lines here, and becomes evident of the importance of this area from trading perspective. Traders tend to gravitate and use this level as a bias shift, either to the upside or to the downside. On the downside, I will say that we do have that key 100-day moving average. That's the blue line in this chart that the market needs to get to and through, and perhaps that is causing the brief bounce, or the bounce back into this yellow area right here. That level comes in at 105.49. The market low in trading here today reached a low of 1.0561 so far. So got within 12 pips of that 100-day moving average. Move below the 100-day moving average. As you can see, we haven't been below, or last week when the market came down to the low, we came down to around 12 pips or so, maybe a little bit more of that 100-day moving average. We found early buyers would go to the daily chart. Last time the price was below the 100-day moving average, you have to go all the way back to November of 2022 to have that. This is what it looks like on the daily chart, by the way. Move below the 100-day moving average. We start to hit into this swing area between 104.84 and 105.33. So there we have a look at the dollar versus or euro versus US dollar, sharply to the downside. In the dollar yen, this is the 4-hour chart of that currency pair, and what we can see in trading here today, that the high price here came into right near the low of the swing area. The swing area defined by a number of different ceiling levels through here, and then broke above it and tried to use that level as support here and here. And in trading at the beginning of this week, the market fell, or last week, at the end of last week, the market fell below that swing area, found resistance. And again today, again, this is the 4-hour chart. The price moved up and retested that swing area and found sellers. We moved below the 200 bar moving average. We were below that level earlier this week, and if we stay below that 200 bar moving average in the 4-hour chart, 133.607, that would be more bearish. Currently traded at 133.07 for the dollar versus yen, which is taking the price down right around here, where the actually we're 132.60 right now, which is taking the price down to the 50% retracement level of the move up from this low to this high right here. That level comes in at 132.55.8. The low price in trading here today reached 132.52, which is just below that the 50% retracement level. Actually, the low price came in 132.567, just above the 50% retracement level. You can see earlier this week the market fell below 50% retracement, but rebounded back to the upside. So getting and staying below 50% retracement, and this level right here is sort of key in the short term for the dollar versus yen. We'll see how that plays out. We'll take a look at the sterling versus US dollar. This is on the hourly chart. And this compared to the euro versus US dollar, the pound versus US dollar has seen less of a move to the downside. We did find support in trading here today against the 100-day moving average. That is this blue line here. I'll put it on my arrow. It's a lot easier to see. That right here is the 100-day moving average, 1.2032. The prices moved back above the 100-hour moving average at 1.2089. Currently, at the moment, the 100-hour moving average is 1.2073, so we are seeing a little bit of a bounce off of the off the 100-day moving average here in the sterling versus US dollar. On the top side, we'll be watching this swing area right through here as a level of resistance on further momentum to the upside. This was a ceiling through here, and then became a floor through here, and then we broke through the floor in trading here today on the hourly chart, and getting back above that level would not be something that we would want to see in the pound versus US dollar. The 50% retracement of the move down from, you have to go back in time from this high right here. This is the January 23rd high. The 50% of the move down to this low right here comes in at the 112.24, so that's going to be a close resistance level, as is this area right here. This is the more important level on the top side to stay below if the sellers are to still play in this game and get the price back below the 100-hour moving average and the 100-day moving average. But right now, the pound versus US dollar is being a little bit more of a safe haven in the European, amongst the European currencies. Finally, let's take a look at the dollar versus Swiss franc. And if we take a look at, let's see what the hourly chart looks like. Now, we'll keep it on the four-hour chart here. You see the sharp move to the upside from this low way back here to the high, and then we had the sharp low move to the downside. We took the price nearly to the low price that we saw at the beginning of February, so nearly a 100% retracement of that move, and the market found support buyers against that level and started to move higher in trading here today. We moved up toward the 200 bar moving average on the 4-hour chart at 0.92668. We're seeing dollar Swiss or the Swiss franc get sold off. Dollar being a safe haven somewhat against that currency, but as a result of the Credit Suisse situation. But still the upside was limited to the 200 bar moving average on the 4-hour chart. So there you have it. Look at some of the major currency pairs. Lots going on in the markets. My name is Greg Michalowski. Good fortune with your trading.